put it into Bitcoin or you lose it all. And so this means different things for different people, right? If you live outside the US, this is a lifeboat. It may save your life. It'll keep you from being impoverished or murdered or left destitute or starving, right? The dollar's lost 95% of its value over the last 80 years. But that's actually not true. The dollar's lost 99.7% of its value if your benchmark was Miami Beach real estate or any scarce desirable asset. I bet the story's not that different for New York City or Hamptons real estate or Picasso's or the like. So inflation's an issue, and I figure the CPI is 8%, but the real inflation rate in assets is 15 to 20%. We know that all these currencies are weakening, right? Every Eastern European currency is weakening. The yen is weakening against the dollar. I mean, everybody is weakening, and the dollar is losing 20% of its value. So I think the macro environment says I got to find an inflation hedge. The political environment, on one hand, is a massive endorsement for digital assets by the White House last week when President Biden said 40 million Americans need digital assets, and we're going to embrace this. With the Ukrainian-Russian war, and especially the sanctions, where we seize $300 billion worth of treasury assets from the Russians, I think the Chinese have $3 trillion worth of assets, and that might have got their attention. And probably pretty much the conclusion is, if you're any nation state in the world and you think you might ever be in conflict with another nation state, and you're holding their credit derivatives or their currency derivatives or their currency or gold in one of their banks, that's not really proper anymore. So I think that's got everybody scratching their head saying, I don't trust the currency as a long-term store of value, A, and I don't trust my assets to not be seized, B, what am I going to do? And then right in the middle of that, you see things like Bitcoin poking their head up saying, check me out. Yield curve is dead flat, Guy. It was like 240 basis points for 1 or 2 year money and 240 basis points for 30-year money. And the irony is, in the face of that, where you've got 8% CPI, probably you've got 10 to 15% PPI, you've got 15 to 20% asset inflation, you've got a 2% long-term interest rate. In the face of that, you've got the Japanese holding 10-year money at 25 basis points, exercising yield curve controls, saying they will literally buy infinite bonds to hold the interest rate at 25 basis points. And the result is, lo and behold, surprise, surprise, the yen is weakening against the dollar. And then, of course, the mainstream media narrative is this is really great for Japanese manufacturers. Now, it's not a problem. There's no inflation. And you look at it and you say, well, it's pretty hopeless. You've got I would say $100 trillion of currency, $100 trillion of currency derivatives in the form of sovereign debt, and another $100 trillion worth of equities and commercial real estate that are value based on fiat cash flows. So that's $300 trillion worth of assets with a negative real yield of anywhere from minus 15% to minus 20% properly understood. Improperly understood, the negative real yield is only minus 6 to 8%. And if you're a rational investor, you have to stampede to property. And now the debate is just, what's the most desirable property? Is it land? Is it art? Is it sports teams? Is it gold? Is it Bitcoin? Is it some other crypto? Have you invented cold fusion, in the next Tesla? And are you going to buy that? And so that's the investor attitude. I don't see there's no political conviction or will or any likelihood that we're going to stop the expansion of the money supply. I mean, no one's expecting that. No one's even talking about that. So that being the case, I think your real choice is just, do you want to be long property? Which property? And of course, My attitude would be you should be leveraged long property in an inflationary environment. You want to be short the dollar. By the way, you want to be short the dollar because it's like negative 15% real yield, but even more like to be short the peso, which is probably a negative 35% real yield. So you want to be short a weak fiat currency via debt. And then you want to be long a property, ideally a non-sovereign store of value. Or if you're going to hold property in a nation, hopefully you either own the country or you trust the country. How valuable is $1 billion of real estate in Moscow right now, right, to anybody in the Western European region? So you got 100x opportunity or addressable market from here even without considering inflation. By the time we get there, it'll probably be 200x. So I don't think we're too early. I think we're 1-2% into it if you look at it weighted. If you look at it from a time point of view, if you're an institutional investor, the first 10 years of a crypto network, you probably have to just sit and stare and see if it's going to break. So it was engineered, January 3rd, 2009, but you had to wait until about 2020 before you were sure it wasn't going to be hacked, banned, broken, copied. And so I think 10 years later, it starts to become interesting. We're year 2 of institutional adoption, right? Year 1 maybe started with MicroStrategy, bought $250 million of Bitcoin in August of 2020, and that runs about a year. Like we're 18 months into our journey here. So you're in the middle of year 2 of institutional adoption. There's 10 years of education, and in those 10 years, what happens at the end of year 1, well, Elon Musk gets involved, and then all of a sudden there's 24 Bitcoin miners that are publicly traded vehicles about now. There's another dozen companies probably come public. So you're watching the institutionalization of the asset class. We're waiting for guidance from the SEC, the FDIC. The executive order from the White House last week was a massive milestone. That'll be 24 months. By the end of the first Biden administration, I think we have 80% of the regulatory clarity that you need to understand this. That means that from the year 2024 to the year 2028, 80% has been figured out, and by the year 2030, maybe 90% has been figured out. And at that point, I think it's just kind of like a growth industry. I mean, it'll be a nice growth industry, 2030 to 2040. But right now we're in hyper growth, early stage, lots of questions, lots of people don't understand it. But I love that part because I think this is the stage. It's like 2011 Google stock or 2011 Amazon or Apple or Facebook. Just at the stage where it's kind of unstoppable. It's necessary. A reasonable objective person would say Google, Amazon, Apple, Facebook, they were all useful and necessary in the year 2012. Yeah, I mean, the best way to think about it from a family can do this, a company can do this, a municipality can do this, and a government and nation state can do this. Everybody can apply this leverage. For MicroStrategy, we started with 250 million of investable capital, and we put it into Bitcoin about 18 months ago, and we have parlayed that into about $6 billion of capital in 18 months from 250 million through a series of a Dutch auction, equity offerings, convert offerings, debt offerings. And just today we did a, asset-backed loan, and that's what we announced today. So, from our point of view, what we took a stock that was the bottom at $90 a share. It was 120 when we started this journey. And we've driven it up by a factor of 4 or more, and we created billions and billions of dollars of shareholder value. What's the lever? The lever is Bitcoin is the only scarcity in the universe. It's capped at 21 million coins. 1,000 years from now, there's every reason to believe there's 21 million of these things. And if you compare that to gold or silver or oil or natural gas or soybeans or land or cotton or whatever you want to call a commodity, they're all being produced per demand as the price goes up, and Bitcoin isn't. So when you grab $1 billion that's got a negative real yield of 15%, you already got a $150 million a year benefit there. Then you flip it into a hard asset I'm not going to call it a currency, because to be a currency, you have to be able to transfer it every day with no tax event. So you convert it from a weak currency to a hard property. Buy $1 billion of property, and if the property is getting more valuable and more in demand, and Bitcoin's going up 100% a year on average for 12 years. So we're basically, we're trading something that costs 3% money for something that yields 100%, or something that's got a negative real yield of 15% for something with a positive real yield of 100%. You're arbitraging the difference. And the difference between Bitcoin versus gold versus CNY versus USD is they're making more of those other things. Gold, they're making effectively 2 to 4% more, probably 4% more, because they keep hypothecating it, and you don't control the gold markets. The metal markets look pretty rigged based upon the nickel fiasco of last week. Nobody believes them. So when I talk about, give me a lever long enough and I can move the world, what I mean is the fulcrum is Bitcoin, because it is the most certain thing in the financial universe, the economic universe of the human race. And if you are a company and you are adopted as your reserve asset, which is what MicroStrategy did, you just lean on that lever and you drive your stock up. If Tesla did it, like if Tesla had gone and bought $10 billion or $20 billion worth of Bitcoin, it'd be worth $100 billion right now, right? If Apple Computer did it and they started, what would happen to Bitcoin if Apple said, we're going to basically sweep all of our Apple cash flows into Bitcoin? Okay, well, Bitcoin would go up by a factor of 4. Apple would end up making $500 billion. Their stock would go up by $1 trillion. So anybody can do this at any scale. But now what happens if the Emiratis do it or the Saudis do it? It would be worth $1 trillion. You're going to lose 99% of your wealth in the course of one lifetime if you take the conventional strategy. So when you know you're going to lose 99% of your wealth, at some point you got to take a risk, right? That drives the exodus, right? The ship behind me is people sailing across the ocean because they knew life was hopeless if they didn't leave land. And I think that you've got a perfect example if you're sitting in any country with a weakening, collapsing currency, whether it's Turkey or Syria or Argentina or Venezuela or fill in the blank. It's hopeless unless you take a risk. And, Dan, my last point I make is there's a very conventional view, like equities are conventional stores of value. Well, equities aren't stores of value in Venezuela. Equities aren't stores of value right now in Russia. If the currency collapses or if the counterparty is not trustworthy, then the equity is not a store of value. And in this case, if you're going to hold an equity, I would say, I would rather in this environment own a stock like Disney that owned the intellectual property rights to every cultural icon in the Western world. Intellectual property, as opposed, or I'd rather own a company that owned 1,000 Picassos and Leonardo da Vinci paintings because they're property backed, or I'd rather own a company that owned $1 billion of gold. Bitcoin is obviously the king of crypto property. If you look at where the action right now is, it's in the stable coins that are exploding, and you can see this very interesting market dynamic between Tether and Circle and UST and what Terra Labs is doing. And if I walk down the street and I ask people, everybody in Africa or Asia or whatever, would you like crypto dollars in the palm of your hand that the bank can't seize and the government won't take? And asked anybody in Syria or Afghanistan, they would say in a heartbeat, yes. Even in China, everybody in China wants crypto US dollars, right? Everybody wants dollars. It's not because dollars are a great long-term investment. It's because dollar is a much better short-term investment than every other currency on earth. And so there's a massive demand for that. And that technology has gone from 5 billion to 200 billion in 24 months. And so there's a lot of action there. I think that'll go to $1 trillion, Guy. I think it'll go to 5 trillion if the regulators, provide any kind of guidance. Battle between the fundamentalist and the traders, the hodlers and the traders. The hodlers have spent 100 hours studying this. They've concluded this is engineered perfect property or perfect money. They've got a 10-year to 100-year time horizon. They're going to hold it as generational wealth transfer. The traders think it's a risk-on asset, and they're thinking that I'm going to short it to hedge out my NASDAQ position. And they haven't spent 100 hours thinking about it or studying it. They're just fast money. So over the near term, the traders win, but over the long term, the hodlers win. And then in the East versus the West, like if you're, Manhattan Upper East Side and you've got a lot of money in the stock market, you feel very comfortable. You like your life and you like your models because they worked fine for you, But if you're living in Ukraine or Russia or South America or Kazakhstan or China or fill in the blank or Afghanistan or Syria or Lebanon or Turkey, the Upper East Side, stock portfolio isn't working for you. You put it into Bitcoin or you lose it all. And so this means different things for different people, right? If you live outside the US, this is a lifeboat. It may save your life. It'll keep you from being impoverished or murdered or left destitute or starving, right? But if you're in the US, you're either an intellectual hodler and you get it, or you're a fast money trader. And every month that goes by, there are fewer and fewer traders, there are more and more hodlers. And the variable here is education. We are educating the masses on what this is. And if you think it's a speculative asset, when you use words like it's just a crypto thing, if you're using crypto, that means you really don't understand it, because nobody describes Bitcoin as crypto anything. When you say Bitcoin, it says, oh, I might understand it. And I think this is really just a process of maturing of the asset class. And in the near term, I joke, it's kind of good to have the fast money traders, because I need someone to sell it to me.